Bismillahirrahmanirrahim. Assalamu alaikum. Dear friend and student, welcome to MR Circle. I am Rehman and I am here to teach you financial management. Today we are going to discuss the types of financial market. What are the types of financial market? So we have two types of financial market, money market and capital market. Inshallah, after watching this lecture, you will have full command on these topics. You can solve any types of question about money market and capital market. So let's start our lecture. First of all, we have money market. What is money market? Money market is actually a place where the short-term securities is issued to raise the fund for short terms or to raise the funds for working capitals. The money market dealing with short-term securities. It means that it is used to raise funds for short times. Raise fund for short time or working capitals. What does it mean by working capital? A working capital is actually a capital or asset which is used in day-to-day operations or in daily operations like cash, inventories, account receivable, accounts payables. These are such types of assets, such types of capital which is used in daily operations, which is used in short terms for short time periods, which we cannot use again and again. The maturity times of money market is less than 1 year. It means that a money market deal in 1 year. You can't exceed it from 1 year. Now, maturities. What is maturity? Maturity is actually a period of time in which the asset is completely utilized, in which the asset is completely converted into cash, into funds. The money market have high liquidity. It means that the share which is traded on money market is easily converted into cash because the time period of money market is less than 1 year. It means the time durations of money market is low. So the shares, the securities which is traded on money market is easily converted into cash, which is actually liquidity. The next point in money market is that it has low risk. It means that the money market is low risky market. Why? Because the time duration of money market is low and it deals with governments and top corporations. This means that there is low chance of bankruptcy of a corporations. Why? Because the time duration is low. When you invest in money market, the time duration is low. So there is low chance when the time duration is low. So there is low chance of bankruptcy of a corporation. Or we can say that it deals with governments. So the money market have low risk to invest. The next steps in money market is it have low returns. Low returns means that when the risk is low, so we say that when the risk is low, so the return is also low. The chance of return is also low. Or we can say that the durations and money market is low. So there is low returns because the interest rate is low. When the time duration is high, so the interest rate is also high. So when the time duration is low, so there is low interest rate, which become the reasons of low returns. So money market have low return chances. Now the instrument which is used in money market, which is used for raising the funds for short terms is treasury bills, call money, commercial paper, commercial certificate or deposit. These are some types of instrument which is used in money market to raise fund for short term for working capitals. Now let's come towards the capital market. That what is capital market? So capital market is actually a market which dealing with long-term securities, which is in which the dips or long-term dips are traded. Or we can say that it is a place where the securities is issued to raise funds for long terms or for fixed capital or working capitals. Fixed working capital means that the capital or the asset which is used for long durations, which is used for long operations like lands, machines. These are some types of asset or capital which is used for long terms durations, which is used again and again in a corporation's operations. So capital markets, the securities, the bonds, the shares are issues to raise fund for long-term securities, for fixed working capitals. The maturity times of working capital market is more than 1 year, or it is used for medium as well as for long terms. The maturity times of working capital is more than 1 year. It means that the securities which is traded on capital market is for long times, for long durations, and which the asset is converted, completely utilized in long terms and long durations. The next tips in capital market is it have less liquidity. Less liquidity because the time duration is high. So we say that when the asset is easily converted into cash, or we can say that when the assets converted into short times into cash, then we say that it is liquidity. But when the asset is converted in long terms and long durations, then we say that it have less liquidity. So capital market have less liquidity because the assets, the shares, the bonds are converted into cash in long terms. The next steps in capital market is high risky market. The capital market is high risky. Why? Because here we invest in long durations. When the durations of a corporation's of investment is high, so there is more chances of bankruptcy. There is more chances of falling the corporation's performance. So it have high risk. When you invest in a capital market, you invest for long terms. It means the durations of a corporation is high. So when the duration is high, so there is more chances the bankruptcy of that corporation. So it have high risk. Next is it have high return chances. We say that when the risk is high, the return will be also high. It have directly proportion with each other. So capital market have high return chances. Why? Because when the time is high, the interest rate is also high. You collect the cash in the form of dividend or in the form of interest rate. So when the time's duration is high, the chance of dividends is high, the chance of interest rate is high. So it have high returns chances in capital markets. Now the instrument which is used in capital market. Which types of instrument used in capital markets? So in capital market we use the instruments like bonds, stocks, debantures, foreign currency markets. These all are some types of securities which is issues in capital markets, because these instruments deal with long term durations. So this instrument is used in capital market. Now let's come towards the types of capital market. That what is the types of capital market? So we have two types of capital market. One is primary market and the other is secondary market. These two types we discussed in previous lecture. You can watch, the link is given in description. But here we discuss it a little bit, that what is primary market and what is secondary market. Primary market is actually the first hand market. First hand market means that the securities issues for the first times. In primary market, the trade occur between the corporation and the investors, and the share price, the share rate is chosen by a corporations for that price. Now, and the secondary market is that market where the securities issues for the second times, or we can say that where the previous shares is traded. In secondary market, the trade is occur between the investor and investors, and the price rate for shares is decided by the investor who firstly purchased their shares. So this is all about the types of financial market, which is money market and capital market. If you have any question regarding this topics, you can ask in a comment section freely. And if you don't subscribe our channel, please subscribe our channel, like and share it with your friends. So take care of yourself and stay with us. Wassalam, Pakistan Zindabad.